everyone, welcome back to Navalier Market Buzz, episode 39. I'm Crystal Navalier, and I'm joined again this week with my father, Louie Navalier. Dad, welcome to New York.
Well, thank you, and congratulations on getting your master's from Columbia.
Thank you. So a lot of our viewers have been wanting us to talk more about stocks, but before we get into that, what happened to the 20-year bond auction last Wednesday?
That's a great question. It spooked the markets. There's something called a bid-to-cover ratio, and it was 2.46 to 1. Normally it should be 2.7 or higher, and a lot of the outlying bids caused the yields to rise. It had something called a long tail. So that's unfortunate, and that spooked the markets because rates rose. And Scott Bessett's our Treasury Secretary. He'll make sure this doesn't happen anymore. He's much better than Janet Yellen. You know, Janet Yellen had problems with the long Treasury bond auctions from time to time, so she just sold more short to intermediate Treasuries. But Scott's really working hard to have a normal yield curve versus the inverted curve that Yellen had. And Wall Street calmed down. You know, Scott is a very calming person. So, in Scott, we trust.
So quantum computing stocks have been quite hot. Why is that?
It's Barron's fault. Barron's did an article on a stock that we've written a lot of reports on called IONQ. They have these things called quid bits, which is how to package the data for quantum computing. And the IONQ chairman says he wants to be the Nvidia of quantum computing, and that got everybody excited. And on Thursday, the stock popped 40% for a while. It settled, I think, 38% or so. But it lifted all the other quantum computing stocks like D-Wave, that's QBTS. We have written special reports on quantum computing. These have been out for a long time. And so if you're a growth investor subscriber, just go to the top bar when you log in to Growth Investor, click on Special Reports, and you'll get our comments on IONQ, D-Wave, and some other quantum computing stocks. The issue with quantum computing is that Nvidia will not be able to make its chips faster by the end of the decade. There's 2 more generations of the Nvidia GPU, and what's happening is the transistors are just getting so tiny they can't cram more on a chip. I mean, they're 208 billion right now, okay, and you know they're approaching the atomic level, so you just can't put more transistors after the next 2 GPUs. So the only way to speed up computers after that is to do quantum computing. And that's where you use a 1 and a 0 instead of a 1 or a 0. And NVIDIA's been having these contests who can develop the best quantum computing language, and that's what D-Wave did. They won that contest. I personally think NVIDIA is going to dominate this, and I think NVIDIA is the safest play. They currently have a quantum cloud simulator. Google wants to have the first quantum computer. But these companies are basically building the architecture so they can program for quantum computing and how they package the data. So very strong sales in both those stocks. They both have beaten analyst estimates. They're still losing money, but they're losing less. So they will be added to our managed accounts and things when they do earn money or they make the transition from negative to positive earnings. But they're 2 very, very exciting stocks, and they just went nuts this week.
So speaking of stocks, I know that earning announcement season is winding down, but which stocks posted like the biggest earning surprises?
Yeah, it's important to show everybody what we're all about, and so let's just cut to the chase and show you exactly what happened. AGX is helping build out the power grid. That's its specialty. It's called Argon. And they had a 93.9% surprise. Another one was BVN, a copper company. They had a 207.7% surprise. CAVA, the restaurant company, had a 59.1% surprise. EXEL, which is oncology business, EXEL, had a 70.9% surprise. Him and Hers, HIMS, had a 65.4% surprise. Of course, Him and Hers was making the GLP-1 drugs when they could do it under the compound pharmacy laws. That has ceased, but Novo Nordisk has hired them to make GLP-1 drugs for them because Novo Nordisk fell far behind Eli Lilly. So that's pretty exciting for them. Niagen Biosciences, the ticker symbol is NAGE. They had a whopping 264.6% surprise this earnings announcement season. This is also a stock that we talked about last week with Paul Hickey. He likes the stock. This company is all about wellness, especially as we age. They specialize in a drug called NAD+, which basically slows cell degeneration. You know, our cells can only divide so many times, and then that's it. That's why we die, because they've divided too many times. And so if you want to have a healthier life, you know, this is what they do. Obviously, hotter than hot. NEXN International, the ticker symbol is NEXN. They had a whopping 198.7% earnings surprise. And they basically help people advertise, do videos and things like that. But spectacular results from them. PDEX, the ticker symbol is PDEX, makes very precision equipment for the orthopedic surgeons and even some dental equipment. Their earnings surprise was 108.5%, stunning stock. Another one I like is Perimeter Systems, PRM, and their earnings surprise was 107.5%. Okay, Perimeter System makes the foam that they spray around your house when there's a fire, or the airplanes drop when they're fighting the fire. Obviously, fire season's coming up, and everybody has to stock up on their stuff. So great results for them. Another big surprise came from Power Solutions International. Their surprise was 80.4%, better than analyst estimates. They make all kinds of generators to run lifts, cranes, oil field service equipment. Booming business, obviously. We're under drill, baby, drill, especially for natural gas. Another stock we talk about quite a bit is SEZL. They had the biggest earnings surprise of 389.6%. SEZL, of course, provides credit when you go buy something, and you can choose to pay over 4 months, and so there's just a lot of consumers that are struggling, so they're aiding that. Then we have Universal Technical Institute, UIT. They had a 72.6% surprise. This particular company trains the mechanics on your car. You know, all the cars are computerized now, and also for trucks. So that's why it costs so much to service your car, because you got to go to school and learn quite a bit. So these are all examples of some of our biggest and best earnings surprises. Of course, our average surprise, just so everybody knows, is usually about 16 to 18%, depending on the earnings announcement season. Right now, it's running over 19%. So it's been a stunning earnings announcement season.
Now, I noticed that you actually mentioned quite a few fundamental A stocks. Are there any more that you'd like to share?
Yeah, but before I do, let me just explain what a fundamental A stock is. A fundamental A stock is a stock that gets in the top 20% of our 8-factor fundamental model. So it's going to average the top 20% of sales growth, margin expansion, earnings stability, earnings momentum, cash flow, return on equity, ounce earnings revisions, and earnings surprises. We are showing a chart of the fundamental A stocks, how they performed historically. And this is a chart we show at the management company. And because we're registered with the SEC, we have to knock down the returns 1.75% a year. It's an SEC requirement. But you can see the fundamental A stocks are extraordinary. They're just extraordinary. They don't have a lot of volatility. They're pretty safe when they're knocking the cover off the ball. So, and I really love the fundamental A stocks, and it happens to be the top portfolio this year, and that's where your money's invested, in fundamental A stocks.
Excellent.
Fundamental A stocks are very rare. I don't normally have that many, but I have 2 more. Another one is Kincross Gold, KGC. I recommend 5 gold stocks. This is the best one. And another one is Carvana. That's a pretty new addition. CVNA. Obviously, used car prices are very firm with all the controversy over tariffs impacting the auto industry. and also distributing the inventories out there.
So we do have a couple more earning announcements next week. Besides Nvidia, who else will be announcing?
Nvidia, by the way, is on Wednesday, and we talked about that last week, but they usually beat and guide higher. AutoZone is forecast to have a 4.2% sales growth, 1.5% forecasted earnings growth. The analysts can trim their estimates just a bit, but the company did miss last quarter. But AutoZone has a great earnings surprise history long term. This company is just voracious in buying its stock back. So I would not be surprised if AutoZone AZO surprises. Dick's Sporting Goods, DKS, is forecasted to have 3.6% forecasted sales growth, only 0.3% forecast earnings growth. There's some recent analyst trims with Dick's, but it does have a good earnings surprise history, so I wouldn't be surprised if it beat. A lot of their sales are tied to the weather. You know, the Northeast is still, they're not in summer yet, so hopefully it warms up in the Northeast and their sales go up. Abercrombie Fitch, which is ANF, has 3.9% forecasted sales, and their earnings are forecasted to decline 36.1%. There were some recent analyst trims on this stock, and the company did miss last quarter. We also want to look at their guidance very carefully. You know, they were beating a few quarters ago, and I was actually recommending the stock, but I've since sold it. So their guidance will be crucial, like most retailers. A lot of retailers have suspended their guidance, so that's not good. So we'll see what Abercrombie does. Now, Salesforce, which is CRM, their revenue is forecast to go up 6.7%. Earnings are forecast to go up 4.4%. They have pretty steady analyst estimates associated with the stock, and they had a nice surprise last quarter. So Salesforce usually beats. Hewlett Packard, that's HPQ. Their sales are only forecast to grow 2.6%. Their earnings are forecast to decline 2%. It has a horrible earnings surprise history. So I have no expectations at all for Hewlett Packard. They do have help the cloud and build that out, but they're behind Supermicro, Dell. So we'll see if their cloud business is getting any better. All techs have to guide higher, including Hewlett Packard. Then we have Best Buy. Their sales are forecasted to decline 0.4%, and their earnings are forecast to decline 9.3%. But they have steady analyst estimates, and did post a nice surprise last quarter. You know, just electronic retail sales are just not that strong right now. But if we get wind there's going to be some tariffs on all that stuff, maybe that'll help them push out some more inventory. There's another stock that's going to announce next week called Alarm Industries, ALAR. They have 12.7% forecasted sales growth, but they had some recent analyst cuts, and that scared me away from the stock. So we've sold it in managed accounts. I did sell in our investment newsletters. Alarm is an Israeli tech company. I would not be surprised if they surprise. It's just the Israeli ADRs don't communicate as much as I want them to. But I did sell the stock because I just didn't trust this quarter. And they announced on the 29th.
What do you expect for the durable goods and consumer confidence this Tuesday?
Well, durable goods are supposed to be flat as a pancake. I'm hoping they perk up. Boeing's been booking a lot of orders. Obviously, Trump went and got them a bunch of orders in the Middle East. The auto industry has been pretty busy. So we'll see. You know, I think if anything's going to hold durable goods back, it's going to be construction. Until interest rates fall, construction's still slowing down. But, we do want to see positive durable goods, and I would not be surprised if we got it, thanks to aviation and autos. The other big news next Tuesday is going to be consumer confidence. This is the conference board. There's the University of Michigan, and then there's a conference board survey. I love the conference board survey. Economists are expecting to be essentially unchanged. So if it comes in a little better than expected, that would be wonderful. And it's time for consumers to cheer up, but a lot of that's weather related too. So if you could just get the gloom to go away. Well, there's some blue out there, so we're getting there. Okay.
And finally, what do you expect for the Fed's PCE?
That's supposed to be zero, unchanged. I'm in the camp that we have deflation. Consumer prices have fallen 2 out of the last 3 months. The wholesale prices, which is the PPI, has fallen dramatically for the last 2 months. We are importing deflation from China. We got all this inventory that was dumped on America trying to beat the tariffs. So the PCE is going to be should be very favorable. The Fed continues to try to fight an inflation bogeyman that has not materialized. I think they're making a horrible mistake. And so if we continue to get months and months of inflation at or near zero plus some deflationary months, they're going to have no choice other than to cut rates. The European Central Bank, of course, will be cutting rates in June.
Now let's answer some subscriber questions. One of our viewers wanted to know what Moody's downgrade means for investors.
Well, it did shock the markets early in the week. They downgraded the credit of the U.S. government because our deficit's getting bigger and bigger. It's over 120% of GDP. I want to assure everybody we do have a lot of collateral. The government owns a lot of land and things. I don't think we're at the point where we have to start selling assets to pay down the debt, but that's one of the options. And we're no longer officially AAA rated. We're AA rated, but that's still very safe, and that will blow over. But traditionally, when we've had a downgrade, the market does struggle for the next month or so.
Another one of our subscribers wanted to know what was the drop with Targa Resources.
Well, it's an energy stock, and it's mostly energy infrastructure. The deal with energy is natural gas is very sensitive to the weather. So when you have any interest in natural gas, you want two things. First, you want a freezing cold winter because natural gas demand goes up. And then you want a hot, miserable summer because then they use natural gas to run air conditioning because there's a lot of natural gas power plants around America. The last little glitch is it has to be in a metro area, So, if the Northeast freezes, it's better than if, like, the Rocky Mountains freeze, okay? Because there's more people in the Northeast. The other thing is crude oil is unfortunately near a 4-year low right now. The OPEC is producing more. Exxon's got Guyana, and then, of course, we got drill baby drill going on. So the whole energy sector sagged here a bit, but demand does go up in the spring. And Targa Resources, which is TRGP, is really, really more tied to natural gas than oil. So that's what's really going to be booming under Trump because we got to power all the data centers with predominantly natural gas peaker power plants.
And lastly, can you share with everyone what your top quantum computing stock is?
Well, our publisher, we did a special report on IONQ several months ago, and it's up a ridiculous amount. It went up over 1,000%. I think it's up 1,400% since they initially recommended it, and we did that special report. The D-Wave, which is QBTS, is the latest recommendation, and I like D-Wave right now. They won that Nvidia contest, and they're helping provide the architecture for quantum computing. Again, none of these stocks are making money, but they have strong sales. They're beating analyst estimates in other words, they're losing less money. But they both surged last week, so I'd wait for a pullback to buy them.
Well, thank you so much for answering all my questions, and thank you to you all again for supporting us. If you haven't already, make sure to subscribe and like, and if you want to listen to us on Spotify, that link will be in the description below, also Louie's new book. But until then, we will see you all next week with a special guest. Thank you all so much.